Hey TikTok, Jim Malone here, coming to you live on Dallas Trading Floor. It is July 2nd. It's Thursday, right before the Independence Day holiday. The markets will be closed tomorrow on Friday. So I just want to kind of get into it. It's been an interesting day, obviously, already. The jobs numbers that came out were spectacular. And so it's looking like you know, this rally is looking like it still has legs, which is great. So definitely not the time to be short on anything right now. We want to be long because that is the direction of the market. So let's get into it with the slides. The first thing I want to show you, of course, and I show this the first thing every time, and that's the market direction. The NASDAQ has just been powering up tremendously, and it's currently over 10,000. That was that's up. The 10,000 mark on the NASDAQ is a very important important number. Right now, the NASDAQ is at an all-time high. So it's a very interesting time. People are buying everything basically that can get their hands on in the market. Now, here's the thing. Don't buy some of the stocks that are going to be bought out there because many of them are not going to have legs. I mean, people are buying the airlines right now, which it looks like it's a great buy, but I don't think I want to wait until this COVID-19 thing kind of simmers down before buying stocks in the airline sector or in the leisure sector. So even though people love Carnival Cruises and Norwegian Cruise Lines, really be careful with these stocks because they don't have any earnings right now, and they may see problems down the road. But right now, pretty much everything is moving higher, which is kind of amazing. So what happened today, and the reason everything is being pushed higher, is that there were very good job numbers out there. It's just amazing. Now, of course, we still have about 11% unemployment in the United States, which is huge. But it looks as if it's sort of rebounding. It's kind of amazing. Basically, the Nasdaq Composite went up 1.1%, and it's actually at an all-time high. Also, the June payrolls, and this is really what was the catalyst for it, they went up 4.8 million, and the economists' estimates were at the most optimistic estimates are only about 3 million. So it's a very much of a beat on that. And that's part of the reason that's what's pushing this market higher. So be a little bit careful because there just is a lot of movement up, and it looks really great, but we could have a little bit of a pullback. So just be a little bit cognizant of that. Here is the chart for the S&P 500 ETF. It's called the Spider. It's the world's largest ETF. It has about $220 to $230 billion worth of primarily retirement funds. It tracks the S&P 500, which are basically the 500 largest stocks in the market. And you can see it's at 313. It basically did a bounce off of this 40-day moving average here, and that was about 300. So it definitely it moved lower, but then there was a tremendous bounce off of this 300-day moving average. Right now, the trend, of course, is up, and this is one of the reasons why you want to be very careful about shorting any kind of stock. So if you're looking at certain shorting ETFs like the SQQQ, please stay away from them right now because the market, you don't fight the tape, the market is probably going higher. That's my analysis on it. Okay, the real star here, of course, has been the QQQ. This is the NASDAQ 100 ETF, and there are several other ones, but the primary ETF for the NASDAQ 100, this is the 100 largest stocks on the NASDAQ exchange, is the QQQ. And there's other derivatives of this, but this is the primary ETF. And it is just moving very strongly. It's up 287 just today, over 1%, which is kind of amazing. The volume is down a little bit, but overall, you just can't seem to stop the Qs. Now, here's the thing about the QQQ and the large techs where most of this investment is going. Many of the funds have been peddling the idea, well, value investing. We're going to invest in value stocks. Well, the problem with this is the action isn't in the value stocks right now, and it hasn't been for a long time. The safe harbors now are the Microsofts of the world. They're the ones that are showing incredible resilience, even in light of the pandemic. So that's where a lot of the funds are going. Now, here's the issue with that. There's been so much investment in some of these large tech stocks that many of the fund managers are now starting to question that if they want to put more and move it even higher. So there is a rotation into some of the healthcare and in particular the biotech stocks. So we're seeing that. We're also seeing a rotation out of some of the Dow stocks, like the oils, for instance, ExxonMobil. These have been the bedrock of many portfolios in many funds for many years, but because of the fact that the oil sector is at the very bottom, you're seeing a rotation out of that. So this is something that you can really take advantage of going forward here. So I would like to show you the next slide, and that's the diamond. And the diamond is the ETF that covers the Dow Jones average. Now, the Dow Jones average only includes 30 stocks. And some of these are the very biggest stocks, the biggest one being Boeing. Here's the problem with many of the Dow stocks. Many of them are sort of long in the tooth. And even though Boeing has been going up, I think it's very dangerous to invest in Boeing going forward. I think that there's going to be shorting in Boeing soon. There just isn't, even though there's a lot of news about Boeing, they're not doing well. They're getting their lunch eaten by a company called SpaceX in the space business, and the demand for their products, in particular the 737 MAX, is low because many of the planes right now are being parked in Marana, Arizona. So, not quite half of the planes out there are basically parked because there is no demand in the market because of the coronavirus. So this is one of the things you have to be very careful about. Some of these Dow stocks, even though they're going up, I think you really need to be cautious, about these Dow stocks, the Exxon Mobils, even the IBMs, and the Boeings of the world. You got to be a little bit careful here because some of them are probably not going to hold up as well going forward. I think we are going to go into a sort of a new age. Now, I'd like to show you really quickly before we go to the questions. I'd like to show you some interesting psychological indicators. This is one of the ratios that I really like. It's called the put-call ratio. And basically what this is signaling, what this is saying, is this typically calls options exceed put options, typically 1.15 to 1. Now, if that ratio is broken, as you can see it was in March here, that indicates typically a downward trend in the market. Interestingly enough, it looks as if this is trending down. This leads me to believe on the put call ratio that we are probably going to see, believe it or not, even more strength in the market. It's sort of incredible, but that's what the put call ratio is telling me. Another thing that we're looking at is volatility. You've probably heard of the VIX. They call it the fear indicator and that kind of thing. But what it is it's the volatility index. As you can see, during the March 23rd low of the market, it spiked up. And then it's considered, as the money was pumped into the economy, it's considerably moved down. It moved up, it ticked up a little bit at the beginning of June, but yet it has come down once again. The thing about the volatility index, unlike a stock, you want to see this below the 50-day moving average like it is now. So this is actually a very, very good sign on the volatility. I believe it or not, that the volatility actually may be lessening in the market and not increasing. So that's kind of what I see from that. Just wanted to show you my current holdings. I'm only holding 5 stocks, but they're all doing quite well. Netflix, of course, I probably will be selling that on July 10th. I have an option that is probably going to be exercised on me. I have Tesla. It did tremendously today, and I want to show you some charts on Tesla because on Tuesday I showed you Tuesday and then Wednesday, I've showed you that Tesla was near a breakout, and indeed it has moved past that 1,000 support level, and it's broken right through it. So my guess is on Tesla, we actually have not seen anything yet. I think it's going to go even higher. And part of the reason too is that July 1st is the first day of the third quarter, and that is the day that many of the funds have to rebalance. And when they rebalance, they may have to buy Tesla. Tesla is very likely to go into the S&P 500. And because it's moving so rapidly, so far up, that many of these funds are trying to get a jump on it and buy the shares. Unfortunately, only about a third of the issued shares are available for purchase by the general public. This is part of the reason why it's spiking up so much. They're talking potentially about a stock split, which for Tesla would work very, very well. To give you an example, Microsoft stock has split 8 times since its founding. Now, there are some stocks like Amazon that split in the early days but haven't split recently. For Tesla probably to continue to maintain that upward trajectory and basically to more democratize the shares, they're thinking about splitting. So that's something that you might want to consider if you want to get a position of, say, 100 shares in the stock. I think if you were to buy 50 now, you might, in a few months, and you never can tell this, you might see 100 shares. And it's very nice to have 100 shares because that allows you to sell options against them to make extra income. So just kind of wanted to bring that out into the open there. So let's see if I can find for you. Oops. Yeah, I'll pull it back to the. I don't think I have the. I think what I did here. I think, unfortunately, you're going to have to get the trade alerts because I sent you an analysis of Tesla. Again, yesterday I was showing you the breakout level at 1,000. If you go back on the show, and by the way, it's all these shows are archived on YouTube at youtube.com/Dallas Trading Floor. They're all there, and then it's pushed past that number. That 1,000 number, and currently it's trading right below about the $1,200 mark. I do believe that in the next coming months, we may see it, it could be as high as 1,500 or not, but I think there's a lot of pressure potentially to buy the stock as it's being to be included in some of the major indexes, and once it goes into the S&P 500. So I think you're going to see a lot of interest there as well. So let me go here to see if we can start with the questions. Thanks for everybody. I just wanted to put that in there. This is the address, by the way, to get my action trade alerts. They're all free, by the way. Just go to DallasTradingFloor.com and then just sign up on the page. And you can cancel anytime you want. It's free, so there's no risk, no harm. I don't sell the list or anything, but it helps me create trades that hopefully will make some people some money. That's really what I'm trying to do here, is I'm trying to become a better trader and share that with everyone so that they can, hopefully benefit. Hopefully the benefit. There's some of them are clunkers, but at least as the last few weeks, it's been pretty strong. The market's been very strong, so I don't take full credit for that at all in the way it's trading. So let's see. Take a look at the. Oh, hey, hello, Wendy. How are you? I shouldn't even tell people that you're in Alberta, Canada, but I will. Thank you for watching. I really appreciate it. And it's on. By the way, it's on Twitch TV, and Twitch TV is pretty cool. If you're a gamer, it's kind of a cool thing. And by the way, I don't know if you know this, but Microsoft had a competitor called Mixer. I don't know if you're familiar with the Mixer, but if you are, it was sort of a gaming channel. They really couldn't compete with Twitch. Twitch is really the one. If you're a gamer, that's kind of where you want to be on Twitch. And I'm sure you are. If you're a gamer, you probably know a heck of a lot more than I do about it. But it's a really great platform, and I think it's very well designed. one of the best sites out there. And in a lot of ways, I like it better than YouTube. Not that I would prefer you to go to YouTube and subscribe on there, but I think Twitch is great, and I just wanted to give a shout out to them. So I think it's really pretty good. All right, so been trying to get into Tesla for a while, but it's expensive. New buy point. You know what? I'm not going to be on. I'm not going to be on the air, unfortunately. Tomorrow the market is going to be closed, so I'm not going to be on the air. But on Monday, I'm definitely going to put that on and show ideas, because here's the thing about Tesla. I want to see where it settles. It blasted past that 1,000 mark. I do believe Tesla probably will settle a little bit below that, about 1150 or so. But there's going to be a lot of pressure to buy this, not just from retail investors anymore. This is going to be funds that have to have it in their portfolio. One thing I want to kind of bring up as a subject is really interesting, and this causes really hot stocks typically to even go higher, and that is when you end a quarter, and we're at the end of a quarter because June 30th was the end of the second quarter. The third quarter starts on July 1st, which was yesterday. And many of the funds have had a lot of their money in the old quote unquote blue chips, the AT&Ts, the Exxon Mobils, and they just aren't performing relative to some of these tech companies. So they're going to have to rebalance their portfolios. And you can get fired in this business if you don't have the high flyers in there, if you don't have the Netflixes in there, if you don't have the Teslas in there. So I do see a lot of buying pressure in the top tier of the market. And that when I show charts, I typically like to emphasize this, the best performing sectors of the market. And then by doing that, you're going to see kind of where the ball is going to go. It's basically Bobby Orr said that years ago. He was a very famous hockey player, and they asked him, well, why are you so good? He says, because he goes where the hockey is going, not where it is, where it's going. So that's something that you want to be really, really reticent of. And that's one of the reasons why I try to emphasize growth stocks, tech stocks typically, and also in the very top of the market. Not all the time, but I like them in the top of the market because they have a high propensity to be right there. So how do you not get stopped out of Tesla? It's so volatile. Very, very good question. Here's what I do with Tesla, and the reason I do it is typically with Tesla, I typically buy Tesla when it is near a pivot, like it was just on Monday and Tuesday. And you do this by looking at the charts. If you look at my last show on the YouTube, it's Dow's Trading Floor number 79. I talk a little bit about that slide. You just go through the rest of the questions on it, but go take a look at that slide because it shows you that that pivot point. I typically like to buy at or below the pivot points, and that gives you a little bit of safety. That's why when I talk about the buy range, that's why I'm not always buying the stock. I typically like to buy it when it's in the buy range. And so I'm trying to give alerts on that as to, kind of where the buy range is. That gives you a little bit of protection for the volatility. But the interesting thing about Tesla, from where I was trading it in early part of this year, when I started trading it, I bought it initially at 361 because that was the first pivot on the stock, which was about in the, I think it was in the mid-December timeframe. It was 631, and I've bought it and sold it. And then the next pivot on Tesla, I believe, was 869, I believe. And that was just very recently. And then even though there hasn't been a pivot called, this third pivot hasn't been called, I think the pivot was about at 1,000 based on the chart pattern. It's not an official proper pivot buy point, but based on the chart, I think that we just hit a pivot at about 1,000. And so I don't know how much higher that's going to go, but the trading range probably will be from about 1,000 on up to about 1,350 or maybe 1,400 on that. So that's going to be the trading range, hopefully for a little bit of time to give people a chance to get into it, because I still think it's a fabulous stock. And I mean, I don't think anybody doubts it now that they've shown these deliveries. So by the way, Tesla is now the largest by capitalization in terms of their stock value, they're now the largest car company in the world. They exceeded the value of Toyota, which is kind of amazing on that. So let's see. I say I've been signing up for the alerts. Oh goodness. Oh, hey, thank you very, very much for putting it out there. I've been having some trouble. I use MailChimp as a send client for my emails. Please check in your spam box. I am so sorry about this, but a number of people have written back to me and say, "Where is the trade alert?" I sent it out. I sent out one this morning. It's a Tesla chart, by the way. I sent out one this morning, so you should be on there. So look in your spam box, and maybe if you can, if you're using like a client, if you could whitelist the domain dallastradingfloor.com so it won't go into the trash. So I think that's the situation. I hope that it's getting through to other people as well. So it's sometimes when you use these clients like MailChimp, the automatic spam filter looks at it and they say, no, it's not good. We don't want it, and it goes right in the trash. And there you go. And you're just looking through the trash, and it kind of stinks. All right, first question on a stock, WKHS. So let me take a look at WKHS real quick here to see if I can give you any idea, at least from my perspective on it. WKHS. And let's give this quote. This is an acquisition. I don't know if this is. Hold on. Okay, Workhouse. Oh, wow, look at that. Wowee. It manufactures high-performance medium-duty trucks. Okay, interesting. This is kind of interesting that it would be in the automotive sector. Let me flip over to the chart here. This is real interesting because again, I haven't really been looking at this particular sector. This is a pretty sizable chart. This is interesting that it's in the original equipment of auto trucks. Okay, so basically, I guess, the industry rip rank is bad, but that's just because the automobile sector was left for dead until Tesla. So everybody's now ramping up new production and trying to get and they're not vertically integrated. So I suspect that would be a good. I can see why this one possibly would be big because people want to subcontract out the production of these automobile chassis. So this looks interesting. I wouldn't buy it at this level. I would wait for some confirmation on here. I'm going to blow up the chart here just a second. Even though we have a situation where you might be tempted to buy this, looking at this chart, you think, wow, it's really going up strong, and that's awesome. But the problem with buying this chart is that typically it's going to have to settle some more. But this has some look at that, wow. Let me see if I can give a weekly chart. Typically, you want to use the weekly chart as your guide. Okay, we do have a bit of a blow off top, but let's see if it comes down to about $12 a share. I think you might want to be. I think it's wait, watch this one. This is good. I like this chart. Here's the thing about it. Don't chase a stock. Okay, this is really, really important. Don't chase a stock because a lot of times, even though everything's right about it, if you chase the stock, you're going to get killed. So wait until this thing settles a little bit. But I do like there's some things on this chart that I like. Now this is a daily chart, so I like to look at the weekly chart because setups typically take a longer time than this. But you have the 50-day moving average that's crossing the 200-day moving average. That's very bullish. When the red line goes above the black line, that is showing lots of strength, and you can just see it here. And then also look at the amount of buying going on here. This is the 50-day moving average here, this red line in here. Every data point's above that. So somebody's acquiring this. I don't know why, but the chart looks good. But don't buy it right yet. Put it on a watch list. I like this. I like this one. This could be a home run. This could absolutely be a home run. I didn't know this stock, and it's number one in its group. Wow, this is great. Look at that. Wow, it's got a composite of 88. That's excellent, by the way. Let me just see a few more facts about this one. Yeah. This is definitely This is definitely a good one. I really thank you for sharing that. I think it's a very strong chart. I'd watch list. I wouldn't buy it immediately. I'd put that on a watch list. If that thing settles a little bit, and about $12, I'm looking at on that. I don't know if it'll go back down to that. You may have to, you may not be able to buy it. You may have to buy it at about 15. But I think you want to watch this one. Wait to see if it settles, and then good one. That's an excellent deal. I really like that. Thank you so much for sharing with that. So that's great. Okay, which of the new reverse acquisition companies would be better on that? Okay, here's the thing. Please don't buy these reverse acquisition companies. I know this is terrible what I'm saying, but it's very, very difficult because some of these are going to win and they're going to hit it out of the park. But reverse acquisition companies are trouble. Here's what they do. They put together a pool of capital, and then they find a company that they can acquire and then do a reverse merger. Typically, these have been listed companies so that they can bring them onto an exchange. I don't recommend it because buying IPOs typically, I mean, you hear about all the successes, but there's a lot of failures when buying an IPO. I just like to see a little bit more time before. I want to see what they're buying, how it's setting up. And because the market is so good right now, there's so many other opportunities that are probably where you can limit your risk a little bit on this. I'm not against this area of investing, but I just think that it's a tough way to. You got to be more. You got to really have. It's usually you kind of really have to have insider information on that, and of course that's illegal. So, all right. So let's see. I'm going to see about TikTok. Okay, so I've been neglecting everybody on TikTok, and that's not good. What do you think the market is going to sell off? Okay, here's the thing about the market and the sell-off. You know, I was, while this thing was in a downturn, I was shorting the market. I'll be honest with you, from in March, from February into February to March, the sell signals were there. And, I don't know if you can see some of my earlier videos. They were pretty bad. I had I didn't have this setup that I have now. And I don't know if they were on YouTube. I think they were. They're probably just starting to be broadcast on YouTube, those really old ones. But on those, I was showing you basically how to short in that, we had the signals. The signals right now are not to be short the market because the NASDAQ 100 is making an all-time high. Now, will it come off of that? I suspect so. But it is not. It's in a confirmed uptrend. I just don't think the market is going to break, at least yet. I think the market's probably going to be maintained strong until the November 4th. And the reason I do is because the Federal Reserve is printing all kinds of money that's going into the market, and that's just creating lots and lots of liquidity. Now, we're going to have a hangover on this. It's sort of like, going on a bender, but, for right now, I don't know if the market is going to break. I will definitely tell you on action alerts if we're seeing the market weaken. So remember, if you want to get those, I definitely trade on those alerts. So, and I'm trading on the same ones that you are. So if you want to get that, please, sign up for the trade alerts. They're free, DallasTradingFloor.com, and then just put in the information. Now, if you're on TikTok and you can't see this, and by the way, I'm simulcasting this on YouTube, youtube.com/DallasTradingFloor, and also on Periscope, pscp.tv/DallasTradingFloor. You can sign up for it really easily on your phone. All you have to do is go to my profile, hit on the link, and you'll be taken right to the page. I figured that out finally. I'm not the greatest technical guy, but I'm getting better. I'm getting a lot better than I used to be. So I appreciate I appreciate everything that's there. Okay, so next question. Any thoughts on ACCD? Let me look at ACCD really quick. Let me pull the chart up. ACCD. Give you a quote on that one. And okay, yeah, all right. Accolade. Okay. No, I'm not. No. This is a very strange. This provides personalized healthcare benefits. No, okay. This just came out. This is an IPO. Yeah. Okay. It's really up strong. Oh wow. Okay, I want to show you this. I actually think I saw this one. I saw a little bit of it. I wasn't really watching this space. Here's the thing: don't buy it right now, but put it on your watch list. Wait about 3 months. You see, because typically, um, you know, typically it will retrace a little bit, and then it will move higher again. So this is an interesting IPO. I guess it just IPO'd, right? Yeah, it literally just IPO'd, and it's a good one. But no real thoughts on it yet. I typically don't like to buy IPOs out of the gate because they typically will go up and then they'll pull back, and then they'll move higher. But it's just too early to buy this one. You're basically looking. The first time you can buy this one really is about 3 months from now. And I know that sounds kind of disappointing because I hope it doesn't move up too high, but this is definitely one you want to watch list to see. So this is great. Another great suggestion. I so appreciate. Okay, so think about Wirecard. Okay, absolutely. Please, 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 do not buy Wirecard. Wirecard is part of a fraud. Please don't buy it. Also, please, and I'm begging you, don't buy Hertz either, because these are bankrupt companies. You don't want to buy stock in a bankrupt company. I know that a lot of people, when they're getting in, they're like, wow, it looks so good. I know the brand and everything, but seriously, don't do it. Wirecard is going to be the recipient of a lot of investigations. There's a lot of fraud in the company, and they ripped off a lot of people, especially in the UK. So if you're looking from any of the UK countries or Europe right now on Wirecard, just don't buy it. Please don't buy it. I think it's going to be a very bad scene. Here's the thing: if you're looking to buy in the fintech space, again, I like PayPal. I have over the years I've been in and out of many times. I really like it. It's down a little bit today. It's expensive, and Square's number one. But if you're looking at fintech, you ought to be looking at these kind of companies. So let me show you this. PayPal is number two, Square is number one in the fintech space. It's a little bit pricey, but it has a long way to go. As you can see, this is the daily chart. I'm going to switch to the weekly chart here real quick to show you kind of what you want to do. Fintech is a great place to invest, but always try to invest with the winners. Look at this chart; it's super duper. And let me show you Square. That's another one that if it isn't on your watch list, it should be. Square is done great stuff, especially for the small merchant. It's gotten a little bit expensive, and it's pulling off a little bit off of its price. You can see this is a typical way a stock moves. Is that it doesn't move up all at once. That's why you want to look at the weekly chart. But it's gotten a lot of it's moved up. It's going to back off a little bit. I suspect it's going to be moving to about the 109, 108 level. This is definitely one I think you want to. I think this one is one you want to be in. I would buy this after it backed off, and I would really like to buy this if I could get it about 95 or so. And I think that may be possible because I do think there's going to be a consolidate. It's going to pull back a little bit, and then you may have a chance to buy Square. But put Square on your watch list. It is a terrific stock, and I think it's going to be a winner, at least in coming up in the fintech space. So, but PayPal is my one of my all-time fintech favorites. Square is one of my new favorites. It is great stock. Spotify. No. PC. Okay. PCTY. Let me look at PCTY really quick on this. PCTY. This is Paylocity. Yeah, this is a good one too. Yeah, this is super. Oh man, you're really looking at some really strong stocks. Paylocity is number one in this group. I think when the reopening happens, you're going to see some very good. This is a good stock. This is a very good stock. There's some, it's funny. You get sometimes in certain markets, you just get a lot of really good stuff. So don't try not to buy junk because there's so many good stocks that you can buy right now. The market is in a confirmed uptrend, and there's a chance to make some good money. This one went up when this right now it's up 1.4%, which is tremendous. $2.11 up, 152.99. Paylocity. Here's the thing about Paylocity, and the incumbent companies in this space are like ADP. They're losing all kinds of market share. It's the Intuits, it's the Paylocities, it's the Paycoms. They're taking over. That's how people are outsourcing HR. So this is a really good space. I really like it, and I think it's definitely good. So definitely gets my seal of approval. Okay, Documentum. I love Documentum. I've had Documentum. By the way, I don't know if you can go back to my older shows. I think about a week ago, 10 days ago, I did I was on Documentum was on my list of recommends. This is a great stock. It has some competition with a potentially other great stock called Adobe, but I just think that beyond the COVID-19 thing, this is going to be the way going forward. This is going to be how people deal in the space. Now look at this. This is unbelievable. It's up $7.60, the 7.64%. If you didn't catch this wave, it's going to be a little bit tough. It's off a little bit after hours. We're just after hours. It just closed. It's going to settle down a little bit, but $13 up on a $192 stock. That is powerful. That just shows you this is why right now, at least we're right now, we don't want to fight the tape. We don't want to be short anything right now. We want to be long because it's a crazy market. Now, how long will this last? Who knows? I don't know, but I can tell you from my reading of the charts, we are potentially in another uptrend, which I find amazing. But I do think that we are at the beginning of another bull market, if that could be believed. Now, I could be totally wrong on this, but I am putting my bets on the table like we're going to go even higher. So don't buy junk. There's a lot of good stuff out there. Here's the problem when you get these tremendous movements into the market. You get situations where the best perform super and the mediocre are carried along, but when there's any sign of weakness, it's the ones that are mediocre and worse, they're the ones that drop out of the sky. So you want to keep your quality. Right now we are in a confirmed uptrend. There's a lot of quality out there to be bought at relatively affordable prices. Obviously, DocuSign is one of the more expensive stocks out there. I think it's a quality stock, though. But there's other ones that are in an earlier stage of their potential development. One of those is Ping, P-I-N-G. You might want to take a look at that one too. So that can be a really nice stock there as well. So let's see. Thoughts on all okay. What do you think? What do you think about options for Tesla? Here's the problem with options for Tesla right now. I love Tesla, of course. I'm in it, and I've been in it basically since December. It is a stock that is probably going to move much higher. It did. It was up $91 today, if you can believe that. By the way, they did very, very well on their deliveries, apparently. And that's really pushed it up. It's moved up in the after hours, not a lot, just about 65 cents. But there is just a lot of demand for this stock. I do think that the options are overpriced, though. I really do believe them. Now, I like to. I've been selling the options because I have underlying shares, but I'm even afraid to sell them. I sold a $1,200 option. I thought there was no way that would be exceeded. Boom, one day. Basically, it went from 1,000. I had a 1,000 option and then I had a 1,200 option. I had to buy both of them back. I've now sold a $1,500 option, thinking that there's no way that it can get there, but maybe it is. So I don't know about that in terms of buying any any anything right now. The thing about it, I think really it's really tough. I'm going to have to think about that, how to play the options on Tesla. Here's the thing about Tesla. Instead of playing the options on Tesla right now, I think it's better to just buy one share, if you can buy one share, or 2 shares, or 3 shares, because this is going to split. This stock is going to split. Now, the question is it going to split for 2 for 1? Is it going to split for 5 for 1? I don't know. But I do suspect it is going to be split. And when it is, you can be in a very good position. So don't necessarily, try to get in on this if you can. It moved past the $1,000 floor, which I believe is the floor on the stock. There hasn't been an official buy point yet put out there, but it is definitely moved beyond that. And I think that even at the $1,200 range, which is expensive, I think it's going to go higher. So even if you can only buy one shot stock, or here's another alternative to get in on this, and that is to get an account at Schwab, and you can buy a fractional share. You can also do that at Robinhood, but the thing about Robinhood, I can't really recommend the company because of their trading issues. They've had issues with liquidity. I think you're better off to go to Charles Schwab, which has the liquidity, and then do a fractional that way. But I do think this is one you want to possibly consider. Or, you can just buy the index and the QQQs, and that may be a good way to do it. So I can't really recommend any of the options right now to buy, because I do think they're overpriced. That's why I've been selling them rather than buying them. So just my opinion, my 2 cents on that. Okay, so let's see if next one. Now, when is it? Now, when is the right time to buy, please? Okay, let's look at. I think this is a good time to buy. You mean stock now? Let me see if I can get a quote on that. Is okay. Service now. Yeah. Man, you're really coming up with some really, really good issues. ServiceNow is a tremendous stock. I mean, this is. I'm gonna see if I can show you the chart on this. I want to look at the chart really carefully here on ServiceNow. ServiceNow is an absolute winner. Yeah. Okay. Wow, this is a cup with handle, I believe. Yeah, it sure is. Yeah, this is a very, very good chart. Yeah, this is a very, very good chart. So let me blow it up a little bit and put it up here on the screen. So there we go. Oh, there we go. Yeah. This chart is buyable right now at about 400. Anything beyond 400. Now, I don't know if it'll sink back to this $400 level, but as you can see, this is typically how a stock that's really moving works. It cups and then handles for a while, and you can see this is up down movement. This is basically the buyers and sellers fighting it out, and then if eventually, if it doesn't drop from here, and the trend line is going up like this is the 50-day moving average, and you see this high relative strength, typically it's going to break a little higher. We've had a very, very strong market, so there's a number of stocks that are breaking out right now. This is a breakout, but it's retraced, as you can see, this red line here. Now, this is the daily chart. The one you really want to look at to see where the proper buy point is going to be the weekly chart. I think that the buy point on this is, if we see a little bit of weakness in this, we may see a little bit of this weakness down to 400. I would be in a buy range on this from about 401 to about, oh goodness, I would say about 405, 410 on that. That's where I would watch this great company. And as always, just a really, really good question. Thank you so very much. So let's see if I can do. What do you think of IDEX? I'm not familiar with IDEX, but let me pull the chart and see if I can give an idea. IDEX. Let's look at the chart on that one. All right. Wow. Okay. So, okay. Well, this is going to be a tough one. Artificial intelligence. Okay, this is gonna. You don't want to buy this one. You just don't want to do this. I mean, I know. Here's the thing: when you're looking for a stock, price a lot of times is not the way to screen them. Okay, I'm not saying that there aren't some very good, less expensive stocks, but this is if you buy a lot of this, you're going to set yourself up probably for failure because look at this chart. It blew up and then it pulled down. Don't This is not one you want to buy. Typically, anything that's below about $10, you have to be super careful at buying it. Now, people say, well, I can make all this money on penny stocks, and you can, but be very, very careful. If you want a stock that is a good stock but is cheap because they issue too many shares, I like Siri, SIRI. Now, I know that it's not in fintech, but they have a very good deal. And they're off a little bit today, but only 4 cents. I like this stock because it is fairly well capitalized, and I think it's going to do well. Now, this is old Sirius XM satellite. I do think that there's good legs on it. It's not today, of course, it's off 4 cents, and after hours as well. But it's made a nice bounce off of this 40-day. Off the 50-day moving average line, and the relative strength is relatively good. This is typically why I do not like stocks that are below $10, but there are some out there like this one that I think are fairly decent. Also, I typically don't buy a composite rating below 80, and this one's a 74. So, but that was just an idea of a stock that you can possibly buy that's under $10 that has potentially some upside. The other ones, these pooled stocks, these other ones that are showing. It's going to be very tough for you. You're probably not going to like the results. You can sometimes win, but it's hard on these stocks that are below $10. EQIX. EQIX. All right, so let's bring this one up. Oh man, these are some high-priced stocks that you're doing. These are great. Yeah, Equinix. Here's the thing about this. I don't like this stock and I don't like this industry, even though it's super, a lot of people love Equinox locations. We have one here in Dallas, very, very popular. I do not like the gym business at all because I think that once people stop going to the gym, they're not going to come back to the gym. At least it's going to take them a long time. I don't like this industry at all. And I see it's down $10. This is a day which any of the really good stocks are going to be up because it's a very strong day. The market's up very strong, but this one is down. This one may be potentially a short candidate. Okay, what do I mean by that? Well, even in the strongest upturns, you have stocks that eventually, that eventually will fall off the face of the earth, and this may be one of them. So I just want to be very clear on this that. This may be a problem, Equinox. So I wouldn't be an Equinox. I don't like the industry and I don't like the potential. Wingstop. Wingstop. They have really good wings, by the way. I've eaten far too many of them, as you can see. I've got to be locked in a room with no food because that's the only way I'm going to get around this. I love to eat too much. It's just one of those things, but I've got to get serious. I got to get serious on this. And Wingstop is one of the places where, man, if I'm driving along the road and the Wingstop is there, man, I just feel like the autopilot going and parking out in front. So, also, here's the thing about Wingstops. I just don't like this category. I wouldn't be in restaurants just because it's a very competitive business. And there's a lot of good companies out there. Now, if you're going to be in restaurants, though, this is one of the best ones to be in. But typically, multi-unit restaurants, I can't recommend them because of the industry. Now, this is just an overall thing. This has a fairly good chart, by the way. This is a decent chart, and I want to show you the weekly chart on it. I can't recommend this one though because I don't want to be buying in this group. As you can see, the number one in this group is CMG, and I believe I can't remember what that. But here's the thing: it's pretty good group ranking. 47 is good. Retail restaurants, I just don't want to be in them. I just don't want to be in it. It's just too risky with the kind of market environment that we're having now. So I can't recommend Wingstop, but I like their wings. They're good. Um, all right. So, what's the right time to buy Shopify? It's sort of like it's like the old adage with real estate and Shopify. When was the best time to buy real estate? When was the best time to buy real estate? 10 years ago. When was the best time to buy Shopify? Probably 10 years ago. When is the next best time to buy? Probably now. Because Shopify is sort of the future. Every small business that wants to get online, they're Shopify customers. So Shopify is sort of maybe the new Amazon, kind of. I don't know if you could say that. That's really a hyperbole to say that, but they definitely have some really good characteristics. I mean, will they ever be as big as Amazon? I don't know, but I don't know. This is going to be a hard one to buy. I think there was an opportunity to buy at the 900 level. There was a handle there. It's moved beyond the handle, as you can see. So let me look at the weekly chart. Let's pull up the weekly chart to see kind of what that looks like, and to see if we can kind of look at that. God, it's up $120 a day. How is that possible? People are just piling into this thing. They're just piling in. Wow. According to this, it's going to be 1,200. I don't know if that's true, but by September, it should be 1,200 based on this trend line that I haven't drawn in here. That's kind of a dangerous way to do it. But yeah, I think that it's up $120 a share today. That is just absolutely phenomenal. Wow. I can't. I mean, that. I think that there may be a blow off top, but I don't know with Shopify, because Shopify is really a good company. When was the best time to buy it? Well, it was probably, about September of 2019. That's probably was the best time to buy it. So, yeah, like wings. Yeah. Definitely like the Wingstop. The Wingstop is good, by the way. It's just I wouldn't buy the stock, but I buy the wings though. I buy the wings. Jim, do you have any? Do you have pay IBD for that data? Yeah, absolutely, I do. Most of my charts are IBD. And by the way, anybody out there that really wants to get serious about stock picking and stock trading, totally recommend the IBD. It's excellent. I don't get paid for them. I wish I did. I would like to use more of their products. Get the digital edition. I think it's not that expensive, and a lot of my stock ideas come from there. So, I'm not too proud to admit that the IBD is the place to go. It's the go-to place, because they take all of the data every night. They crunch the numbers and they produce these charts, and they're the best in the industry, really. I don't think you can go wrong with them. But they have a digital edition that's really nice as well that you might want to do. So that's the they have I think you can go on free, but unfortunately they don't give you the good stuff on that. But I've used the IBD for years. I've had very, very good results. That's really what started me in trading, way back when I had no money, and this was in the 80s, if you can believe that. And it came out in a daily edition. It was print edition, and my boss at the time, who showed me how to trade options, by the way, it was what his hobby was. He showed me. It's like, oh, there's this thing called the Investor Business Daily. It's a newspaper that shows you how to make money. And I said, well, I thought that was the Wall Street Journal, because I thought I was, super smart back then. So, which I'm not even smart. Yeah, I wasn't smart then, and I'm less smart now. But you can't. It's hard to make money with the Wall Street Journal. With the IBD, you can make money. So that's just a little plug for the Investor Business Daily, which I really, really like. All right, so let's see. Next question here. OG. What is OG? Oh, okay. Do you see Microsoft, Apple, Amazon? How do you see Microsoft, Amazon, and can you suggest any other potential long-term holding? Okay. Here's the thing. I have been a holder in and out of Microsoft since about 3 years ago. I started trading it when it was above 68. Now, why did I Why did I start trading at that time? And this is something that you kind of want to look at for a long-term leader. The reason I started trading Microsoft 3 years ago, and I have it in my holdings now, is because it had exceeded the high that it made on December, I think it was December 31st of 1999, right before the millennium, a long time ago. Now, I mean, it's like 22 years ago, but up until it took 18 years for Microsoft to come back through the Steve Ballmer years to get to the point when they put in the Della in there, and he made it work. I mean, he's a genius, I think, and that's when I started trading it. Microsoft is one of those stocks. It is solid. It is the new IBM. It is the new IBM, folks. Are you going to make a lot of money on the swings? No, because it's so widely held. But I buy it, and then I call options on it. Just rinse and repeat, rinse and repeat. You're going to definitely do very well if you do that. With Apple, I think it's a little bit more volatile. The thing about Apple is up tremendously in the last 6 months. And I do think that this iPhone rollout, which is going to happen, by the way, September 21st, 22nd, it's going to happen because that's always when their announcements are. I think they have 5G phones out right now. They haven't rolled them out, but they're going to roll them out because hopefully the Verizon network, at least in the United States, will be ready for 5G. I hope that's the case. And if it is the case, you're going to see. I think Apple could make some new highs, but I wouldn't recommend it if you're not in it right now because it is a bit pricey. There's another way you can play this that I think is possibly better, and that's to buy some of the component manufacturers that are going to be in that phone that's going to come out on September 24th. And one of the ones I really like is Qorvo. QRVO is the symbol on it, and what they do is they make the RF chipsets for the I get it right. They make the RF chipsets for the Apple for the new 5G phone by Apple. So these are going to do very, very well. And I also think they have a lot of follow-on business with other manufacturers in the Android space, which is also going to take advantage of some of that 5G technology. Here's the company that I think you really ought to watch this one. I do believe it's going to come on strong into the September timeframe. So this is one, and I'm probably going to be building a position in this one just because I do think it's. Let me get that up here. Gives me up. Oh, it's not giving me. It's not letting. It's. I have my feed is frozen. Oh, there we go. Okay, there we go. Qorvo, definitely one to look at. 95 composite rating. It is. It's going to be It's going to be good if you want to be involved in Apple. This is a way you could be involved with Apple and not have to pay the Apple price at least as much. I do think this is going to do really well. It's moved. It's turned the corner. And it's moving higher, and I think this is going to be very strong into September. But it hasn't totally set up yet. Its actual buy point is going to be more like the 117 range. It's at 110 right now, but it's up $2 today. And this has a lot of potential in this in this stock, mainly because of the 5G rollout. I think you're going to see this one doing very, very well. Also, it does have some challenges. Earnings per share down a little bit, but I think that's going to be totally cured when the iPhone comes out in September, because this company has lots and lots of chips in that iPhone, and I think the iPhone is going to be a huge hit. I don't think I'm going out on a limb on that one, to be honest, but I do think it's going to be a huge hit. I'll probably be a buyer of it. Unfortunately, I have to fork over the grand or whatever they're going to cost for whatever they're going to charge for it. I probably will be handing over that money to Apple, and then I will be buying these Qorvo chips that are inside. So that's a good way to play it. That's sort of a 5G play. That's one of my favorite 5G plays right now. All right, so I got in the middle of your speech. Okay, sorry about that. I typically, here's the thing. I typically yammer on for about an hour every day, kind of giving an idea on my stocks and try to take questions for people that take a look at the chart, see if I see anything there that that might be helpful. Also, I put out action trade alerts. These are actual trades that I'm making, and so you can see kind of how I'm doing, and then it might work for you. So it's free. It's basically you go to dallastradingfloor.com, and I'm going to put the thing right up on the screen. It's dallastradingfloor.com, and then just put in the information for this to subscribe. It's totally free. You can unsubscribe if you want anytime. It's a MailChimp thing, so it has all those capabilities. But send out the trade alert. Also, sometimes, unfortunately, I've been sending these things out, and they've been landing in a lot of people's trash, which maybe it is. But so if you're on the list and you don't get an alert after about a week or so, take a look in your spam folder. It might be there. Just wanted to tell you that. Anyways, so that's another thing. Also, if you're looking at me on TikTok, this is being simulcast on YouTube. Please go to my YouTube channel. It's www.youtube.com/Dallas Trading Floor, and you'll see what's coming up. It also has archived all the old shows. I think it's about 70 of them right now. We're on show 80, and we'll be going forward from there. So hopefully you can get some of the stuff. And I try to put a little teaser so that you can kind of see what one of the things I was talking about on the show was. Today, of course, it was the phenomenal move on Tesla, and a slide on that. And then I had a slide on Tesla yesterday, basically the $1,000 resistance that punched through. So that's how I do it. Great. And so it's an hour, and I will see you on Monday. I'm not going to be here tomorrow because it is going to be a holiday and the exchanges will be closed. But on Monday, I'll be back at 2:30 Central Daylight Time here from Dallas Trading Floor. Thanks again for everyone that's taken a look, and I hope you can invite your friends, and I hope that I can make you some money, and I hope you sign up for my trade alerts at dallastradingfloor.com, and I will see you on Monday. Thanks for watching. And everybody on Facebook, YouTube, Twitch, and Periscope, thanks again for watching. I have 2 more comments. Oh, one more. WKHS. Wait a minute. Okay. Oh, thanks. Okay. Next time, when you say about age freight, you should. Oh, yeah. Okay. I think towers. By the way, there's another company in the tower space too, American Tower. I think that's really good too. CCI is really good. Yeah, you have American Tower and Crack. Okay, these are great REITs. I'm negative on most REITs, but I'm real high on the 5G tower REITs, and of course American Tower and Crown Castle. Those are 2 really good ones, and just great ways to go. Happy 4th of July to everybody out there. Just keep. Keep on. We're in it. We're in an uptrend right now. There's some serious opportunities. I don't know how long this is going to last, but I do think that if you follow along some of the charts, you can also make some great moves and great buys. Thanks, and I will see you on Monday. Bye now.